In today's video, we're going to do a deep technical analysis of Ethereum because the coin that many thought was dead has probably caused the most excitement in the market recently. With its incredible price surge last week, it managed to rise by nearly 50%. In fact, we haven't seen candles like this since 2020. We managed to do this 2 more times here, but after that, even though these candles look bigger, in this entire price range, they actually weren't any bigger. They were around 40%. Now we've really managed to attract attention with a 50% price increase. And now, of course, the question is, what happens next? We have broken through incredibly important levels to the upside, and now the last really very, very interesting level is our resistance. We're going to go through this now on the weekly chart, daily chart, 4-hour chart, and 1-hour chart, so we can take a look at where the next price targets might be. But even more important, what do we need to break through to the upside in order to reach the next major price targets above 3,000 or possibly even the new all-time highs of the current cycle, but mind you, to break through upwards? So let's just dive right in. What has actually happened recently that is truly important? Let's take the last strong consolidation phase that Ethereum went through, and that's what I want to show you now. That was in this price range before Ethereum then had the breakout. We can even move this up a bit higher, something like this. And that was a consolidation phase from the past. I'll zoom in on it now so we can see it better, which we used where there were upward and downward movements with a small fake out before the breakout happened. So there was a breakout, a retest, and after that, Ethereum really took off. And after such a breakout, Ethereum just went up another 60% here in a few weeks. We are currently in a similar situation, but the important level that we have crossed is now this lower price range, which at the same time corresponds to all these candle wicks downwards. I honestly didn't expect that we would just break through them like that without encountering any resistance. That was a very, very important level. So looking at the weekly chart, we can see that we have broken through this important level, but we still have another key price range, which is currently acting as our resistance. And you'll see in a moment how harmoniously this lines up with the Fibonacci levels. Because this exact price range, which marked our candle highs here, the ones we had before Ethereum decided to just break out upwards, just like we've seen now, more or less during this downtrend. No one believed in Ethereum anymore that summer, but after this breakout, there was a brief consolidation phase lasting about a week with some movement up and down, a small correction, and then it continued upward. And that has actually been our resistance at the moment. But what can be equated with this resistance? And now it gets super interesting. If I remove this here and bring in the Fibonacci from the cycle high to the cycle low, you can see that we are really bouncing between the 0.382 and 0.5 retracement levels, meaning that this week we are finding support and resistance there. You can see this very clearly on the daily chart. We had support here once, twice, and now we've encountered resistance. That means I wouldn't be surprised if we actually see a bit of a consolidation phase here now, even though overall we're very bullish. You can see that very clearly on the chart, on the daily chart. Why? For what reason? I want to show that as well. Because we're extremely overbought on the RSI. For the RSI to calm down, move further downward, a consolidation phase in this price range would be ideal. The RSI settles down, and after that we could see the next pump up to the 0.688 retracement level, or actually let me zoom in a bit on the retracement so you can see it better, and also the 0.65 level. So what would be next here? Here we encounter new resistance zones in this price range, especially the 0.65 level. You can see that very clearly here. And if I extend this further over here, you can see that the 0.618 and 0.65 levels were also strong consolidation zones in this area. There was another dip here before we recovered. Support again here as well, a bit further down. But this price zone is the next one. That needs to be surpassed. That brings us to the next price target. We need to break through roughly 2,700 or 2,800 coins to the upside so that we can also take out these highs, because then we would really have room to move. So let's include exactly this area again, where we have the recent highs. If we break through that, we would really have space to reach around 3,100, maybe a bit above that. And that would be the ideal scenario for a continued bullish trend. After that, we would have to see how Ethereum reacts here, because either we get rejected and go back down, maybe looking for some room again around the 0.5 level, or we break through it, although I don't believe we'll break through to the upside without a rejection. Then a lot would really have to happen with Ethereum for that. Instead, we would first need to gather some momentum again before we can really continue upward. So let's take a look at where the 0.786 level actually is. And that is also a very, very interesting price zone. If you look at it now, we had a rejection here. We had support several times exactly at the 0.786 level, and then again a rejection before we moved above it. After that, the object really couldn't find any pleasures, let the service run. You can also see the support zones, but 0.786 was ultimately under rejection before we had the sell-off. That means you can take a screenshot of the Fibonacci levels. These are the price targets you should pay attention to now. If you have open positions, you can scale them or possibly close them, depending on what's possible, or take partial profits, and then remove all the drawings again begun now, because we've now covered everything on the daily and weekly chart. Now we want to look at a smaller time frame, because we have, and it doesn't look all that great, we have something on the 4-hour chart. And that's something I want to show you. An expanding triangle, and you can feel free to Google expanding triangle, is actually a bearish pattern. Let's hope that this pattern, why is it bearish in this case? Because we come from a bullish trend and then have an expanding triangle. Of course, it looks wonderful. We're making higher highs, higher lows, higher high, higher low. With these expanding triangles, because of these higher highs and higher lows, at some point, a trend reversal can occur that could push us down a bit. But that wouldn't be ideal right now because it would bring us to lower prices and trigger new liquidity zones. That means we'd have to look at the chart again. Either we actually revisit this price range here, where it all started, because we have a bit of candle activity here, or we really go even lower to the $2,100, $2,200 range, where we also have these price levels. But these are the price ranges you should keep in mind if we do break downwards. But what would be the optimal scenario now? Either, as I showed, we consolidate like with the Fibonacci, or we somehow manage to form other patterns here. That simply means a bullish pennant, and a bullish pennant would be ideal if we could somehow manage that now. Then you would say we just continue like this here. It wouldn't be perfect, I have to say that as well. But that we now consolidate somewhere in this price range, that would be the optimal scenario for me. That we say, okay, we consolidate here a bit up, down, it squeezes together, and then we would have this bullish pennant, which in fact brings us upward 90% of the time. So now we've covered everything bullish. What could be bearish price targets? Always include the liquidation heat map. We now see 2,400 to 2,350 is very, very interesting, dot categorized. Let's take a look inside. What kind of price target could be in here? 2,350 to 3,400. That would be roughly this price range. And if we look at this now and check it out on a smaller time frame, I think you can really see where we could dip in again. That means this is exactly the price range where the liquidation is as well. And for me, those would be new entries, or rather not just new entries. I have positions open twice Ethereum where I would scale the positions. But you shouldn't overlook that. And these liquidations are directly connected to this breakout and were built up from the point where we reached a double bottom. For market makers, it's extremely interesting to grab those quickly and then move on. If we actually drop below around 2,400 again, yes, then it's important to look at a smaller time frame as well. And where have we had accumulation phases then? That would be, for example, in this price range. After a massive surge, we accumulated a bit here for a few hours, which showed us, okay, we're catching our breath here, and then had the breakout to the upside. It was similar here, though it was much smaller, but that would also be a possible price target, for example, if we drop down there, where you could say, hey, I'm going into the red. I'll try again here to open a long position. Exactly. But what I want to show now is, let's zoom out again. When the market really takes off and when the market has exactly these kinds of corrections. And let's just sketch that out very simply now. We have a massive correction, and after that, the market just took off. But let's switch to the weekly chart. I want to show this on the weekly chart. Now, did Ethereum take off after this correction? I want to show that when Ethereum really does something, it really goes full throttle. Usually there isn't really any sideways consolidation. Instead, we have a massive correction here. This one consolidated here, but as soon as that consolidation was over, you can see that Ethereum just shot up massively. And we've actually seen this several times now. Here as well, there we had another breakout to the downside. Of course, we hope that's not the case this time. And after that, Ethereum just made a massive recovery in a single week. And that's exactly what you should pay attention to here. We can also see this in the past, right? If we look further here, Ethereum dropped sharply, but when the recovery came, Ethereum was almost unstoppable. 1, 2, 3, 4 weeks closed out just bullish before a bit of a correction came, or even a stronger correction. But what happened after that? Ethereum once again surged upward unstoppably. And that's something we should keep in mind, so that we don't get too bearish, because every time, except of course during the bear market, Even though we had a strong correction here, I mean an incredibly strong correction downwards, we also had a price increase of 100% after we corrected here. And again, it took a few weeks and I put out. So 1, 2, 3, 4, 5 weeks. And actually, we haven't seen that much yet. We're now in the third or fourth week because this one wasn't parabolic. You can't really say that. But the first parabolic candle is actually only the second week since we've been in this phase. I wouldn't be surprised if Ethereum continues to surprise us and keeps moving upward here. Especially for those who have been following the news a bit, BlackRock has now submitted an application to finally enable Ethereum staking. And if that happens, and they've said that would be the game changer for Ethereum, then I can imagine that we could really see another parabolic run with Ethereum, and at the very least, finally reach that $4,100 mark from back then again. This is just a rough analysis for now. What you should pay attention to, possible price targets, because Ethereum is a very, very interesting coin for me, not just at the moment. You know, I've been talking about Ethereum for a very, very long time, and even though it kind of failed back then, it has now surprised us all the more. I hope you enjoyed the video. I hope you got a bit of insight from the technical analysis. Very simple, very clean, without a lot of indicators. Just really the essentials, what's necessary in terms of Fibonacci, and also a few price levels from the price action. Leave a like, drop a comment, and see you next time. Ciao, ciao.